What if the great American housing revolution wasn't about real estate at all, but about the human desire to believe that technology can eliminate uncertainty? What if the story that made Wall Street euphoric in 2020, the story that promised instant liquidity in an illiquid world, was built on a fragile equation that collapses the moment the market stops rising? This is the story of Opendoor Technologies, ticker symbol OPEN, a company that tried to make homes trade like stocks, and in doing so, revealed how quickly a dream can turn into a debt. Stay with me until the end, because the trading setups, price levels, and strategy frameworks we'll discuss later are rooted not only in charts and data, but in the psychology that drives every investor who ever fell in love with a narrative. And for those watching this as a shorts clip, tap the full version link below so you can experience the complete story without interruption. The origin of this narrative begins in 2014 when a group of Silicon Valley entrepreneurs saw what they believed was an inefficiency begging to be solved: the American home selling process. Traditionally, a homeowner lists a property with an agent, stages the home, waits for offers, and endures inspections, negotiations, and financing delays that can stretch for months. The process is analog, emotional, and slow. Opendoor's founders saw a tech-sized gap. Their solution was iBuying, or instant buying, a model where the company itself would purchase the home, pay cash within days, and later resell it at a profit. The appeal was revolutionary: certainty over waiting, liquidity over friction. It promised to turn the least flexible asset class into a liquid digital marketplace. By December 2020, that idea had captured the zeitgeist. The company went public through a merger with social capital Sophia Holdings II, a SPAC lead led by Chamath Palihapitiya, at a valuation near $5 billion. SPACs, or special purpose acquisition companies, were the investment fad of the pandemic era: blank check firms that allowed startups to go public quickly without the scrutiny of a traditional IPO. For a company like Opendoor, that meant a faster route to capital and a louder debut. Investors cheered. The stock hovered near $10, driven by the belief that a data model could price homes more efficiently than any human agent ever could. The macroeconomic tailwinds couldn't have been stronger. Interest rates hovered near zero, mortgage approvals were booming, and housing demand exploded. Opendoor's pitch that it could transform the housing market into an algorithmic engine looked prophetic. But in financial markets, what works beautifully in abundance can break catastrophically in scarcity. By 2022, the environment flipped. The Federal Reserve began raising interest rates to fight inflation,